Welcome back to the YouTube channel of J Finance, Newbury-based mortgage and insurance advisory firm. Today I want to talk about the self-employed and specifically mortgages for the self-employed. So if we look at the different types of self-employment and then the different ways in which mortgage lenders will assess your income. Now, if this video is useful and you want to hear more about this type of topic, we'd love to hear from you. So please comment below, give us a like, subscribe to the channel. So, first of all, let's look at sole traders. Sole traders are assessed very simply. Net profit, not your gross profit or your turnover, but your net profit after your expenses have come off, the figure that is on the bottom line of the tax return that then your tax and your NI is worked out from. But the way in which different lenders will look at that net profit can differ. Simply put, some lenders look at 3 years, some look at 2, some, guess what, look at 1 year only. Now that 1 year might be 1 year trading if you're new to the business, or it might be the latest year in isolation. But ultimately there's a spread, 3, 2, 1 years, okay? Now, for some lenders, that will depend on whether let's say we take the last 2, whether they're going to average or whether they're going to use the most recent year. And that might depend on the jump. You know, someone going from doing 20, 30k net profit to suddenly doing 100k net profit, there's lenders that are going to be a bit suspicious there and wonder what that jump was. But there are some that will just take the latest year in isolation, regardless of the jump. If we move on now to limited company directors and we look at the way their income is assessed. So if you're a limited company director, the company itself has its turnover and then it has ultimately, boil it down, net profit. And that's after corporation tax. That's the company income. Now, there are some lenders that will look at that net profit. There are actually some that will look at the gross profit before the tax is taken off. What they're doing that combined with is your salary as a director, salary plus gross or net profit. Then there are other lenders that will look at what you're actually drawing from the company in terms of salary and dividends. Now that can be quite a difference because as a director, you might be taking a salary, fairly nominal for tax purposes, it might be 9, 10, 12k, something like that. And then if you only need 20 to 30k of dividends at the moment, or historically, that might be all you've been taking. But your company might have 100k net profit that you could very much be drawing if you wanted to. You just don't need to because you'd rather keep the money in the company. So the lenders that will look at your net profit fully appreciate that you might be limiting your income due to tax purposes, but could increase it if you needed to pay a bigger mortgage, and therefore will reward you in a sense and allow you to borrow more. So that's limited company directors. And then I just want to touch on other types of potentially self-employed people. One that if you are a CIS contractor, you may think, well, actually, I'm not self-employed. I only work for one employer. They take my tax off my payslip. And as is often the case with CIS, that's the construction industry scheme, at the end of the year, you actually do submit a tax return and you tend to get a bit of a tax rebate because your employer has been taxing you from the first penny you earned, whereas you get a personal allowance, but I'll let accountants talk about that in more detail. For CIS contractors, there are some lenders that treat you as self-employed and will look at 2 years of your tax returns, but there are others that might look at your most recent 3 or 6 months pay slips and use the gross income. So again, that can vary massively. That is hopefully a really quick whistle-stop overview or whistle-stop tour of the different types of self-employment and how mortgage lenders treat you. Now, we specialise in self-employed mortgages. We have a long history of helping people who are self-employed obtain mortgages by using those different strategies. So if you've struggled to get a mortgage, or even if you haven't struggled and you just want someone to guide you through the process, get the most suitable lender, most suitable rate, etc., come to J Finance and we would be more than happy to help. That's all for now. Don't forget, like and subscribe to the channel for more information and more mortgage tips.